I started my financial freedom journey almost a year and a half ago. And as a part of this journey, I started with investing in stocks and ETFs first and then in cryptocurrencies later on. I use the word investing here and not trading. As a beginner, it can be very difficult to distinguish between investing and trading, as both of these terms do include buying of securities and then later on selling them. But there is a difference. I'm pretty sure that you've seen those headlines about Shiba Inu. And if you had bought just some on 23rd of October, you would have 4x'd your investment within just 5 days. But what you see in those headlines are the outliers, the exceptions and the unicorns. With every single billionaire that is created, there are thousands if not millions who lose on those bets. So there were two beginners. One of them invested in Tesla stock at $555. The other one also bought Tesla stock at $555. He sold his stocks and bought them again. He did this multiple times in the past 6 months. I'll tell you more about them later on in the video. So everyone wants to get rich without doing anything. That's why we have lotteries. If you buy a ticket, you get a chance of winning this huge lottery and getting rich very quickly. These days, when you tell someone to invest their money sensibly, they just ignore you and you'll have all of their hard-earned money in the latest meme coins, thinking that they'll gain huge profits within a couple of days. I'm not saying that you cannot make profits with these meme coins. If I said that, I would be totally wrong. But remember, as I mentioned earlier, there are always people who lose big. And it's not just with cryptocurrencies. It happens with established companies as well. And here is where the investor and trader mindset comes into play. If you are an experienced trader, please don't mind me and keep on doing what you do best. But if you are a beginner, ask yourself this one question. Are you a trader or are you an investor? I'm hoping as a beginner your answer would be that you are an investor and not a trader. Because if your answer was that you are a trader, I think that you're in for big losses. Probably. An investor is someone who puts their money in an asset and looks to profit from those assets growing with time. Whereas a trader is someone who makes money in the short term by buying and selling assets frequently. So one relies on gradual appreciation and the other one focuses on market volatility and timing. Simply put, an investor thinks in the long term and a trader thinks in the short term. With all the ads from online gurus saying that they got millions of dollars within just a small period of time, and you could also become a millionaire if you just followed their strategies. But it doesn't work like that. Trading is not as easy as you might think. It takes a lot of time and effort. Most traders put a lot of money behind their trades, winning big and sometimes losing big as well. Traders want to get into and out of positions as soon as and with as much profit as they can, so they can do it all over again. Many traders analyze charts and other signals to get into and out of positions. Traders also have price targets and stop losses set up so they can maximize their gains as well as mitigate their losses. Investors, on the other hand, hold their investments for a longer period of time if they have good convictions in their investments. Many keep their investments for multiple years and some just hold them indefinitely. As most of the investors are in for the long run, short-term market volatility does not affect their opinion on a company and they tend to believe that the stock value would go higher with time. You might be thinking, which is better? Remember in the beginning, I told you about two guys who invested in Tesla stocks? Well, those weren't two guys. In fact, I was talking about myself. I bought some Tesla stock at about $550. I kept 50% of it and sold in and out of the rest of the 50%. Sometimes getting a profit and sometimes not. And if you're wondering, the 50% that I did not touch appreciated more than the 50% that I traded with. Now this is just one example. There are many cases where buying a stock and holding it appreciates it more, and in other cases holding something is not a good idea at all. So to answer your question to which is better, as a beginner it's always better to be an investor. Think about trading when you have enough knowledge about trading principles. And if you're following the stock picks of a YouTuber from a Discord server, a Telegram group, please be careful. Click here if you want to know how to level up your investing game, and here if you want to know about 5 bad money habits that are keeping you poor. Thank you very much for watching and bleib gesund.